Hello, trading is closed on October 10th, 2014. I'm Jeffrey Tennant. As always, let's start by reviewing my last call. I said I was looking for a gap at the open, which we got. I said if the gap were higher, we could have a big rally and break over this high, but the gap was not higher, so there was no call there. I said I was still willing to give the benefit of the doubt to breaking that high as long as this low held. Well, we gapped under that low, which is what usually happens when I don't get what I want. It's obvious right from the open. During the day, there was a formerly filled mejt target of 1936.71, which identified the early high. We also got one of our failed targets from 2 months ago, 1914.83, that identified the early low. There was support under it, and we got a big bounce. One of the things people new to the system don't always recall is that these prices are support, resistance levels, and targets, which is what the system gives. It doesn't give buys and sells. It gives price targets. We have a new target of 1929.79, most likely to print tomorrow. There's an increased risk of failure because we're in a sharp, impulsive move. If we don't go up, the next target is from way back in May, 1889.57. Let's see how the system did during the day. Early on, the red dot identified an old price target, which printed but not within its preferred time frame. The F here means the drop was a false move, an opinion that was reiterated here when the target identified by the thick line was hit. There was a white dot because it printed within its preferred time frame. Later in the day, it said ultimately lower prices would print. They did. All these F's mean the move is false, and the system targets 1929.79, most likely to print tomorrow. I've gotten a few requests for the mejt system software on other platforms. We don't yet have enough from any one platform to justify writing the software, but there's no time limit on this. If anybody wants to write me, here's my address. Well, now the hard part, talking about what's going to happen on Monday. Well, it's easy to find what's wrong with the market. This is a pattern of somebody else, which typically closes at the high. When it does quite the opposite, it's very negative unless we have a gap open. Monday, which takes out Friday's high, or at least trades over the high very shortly after the open. It also isn't very favorable that a number of buy signals have not worked. This gap usually fills promptly. It didn't. Not yet anyway. The ultimate mejt target usually fills promptly, although it doesn't have to. We are still going in the other direction. Had we gapped lower on Friday and kept dropping, I could have lived with it as far as the negative implications are concerned. But when the gap filled, that posed a problem for me, because usually when you drop down in a straight line to a support level and do not have a gap under it which is maintained, usually there's a recovery. So a number of usually reliable buy signals have not panned out. Everything looks negative, everybody's negative, but that doesn't mean we have to drop. There is another interpretation of the same information with quite the opposite prediction. For one thing, we have my wall going into the close, a straight line move down, and a close at the day of the low, which kept on dropping after the close. Institutions are never going to sell that way. This is massive public selling with no buying at all. Usually these people get punished severely by capping up the following open. Usually, but not always. There are some other indicators. This is the percentage of S&P 500 stocks which are favorable. It's been in a steep decline, and the largest bar happened on Friday. Typically, the largest bar of the move comes at the end of the move. If you look at the volatility index, we're over the Bollinger Band. Same thing happens on the older one. The whole bar is over the band. Usually that happens at the end of the move. If you look at the daily chart, we have a pattern that projects down to about 1830 if we don't cross over this line. But right now we're just playing ping pong between the 50 and 200 day moving averages. Typically when you drop to the average in a straight line, there's a bounce unless you have a gap under it which is maintained. We have a 9, 13, 9 signal to go long on the 15-minute chart. We have a low which is a Fibonacci target of the previous decline. All you do is you look at the middle section. You go to this high. Here's a 38.2%. You go to this one. Here's 38.2. Here's 50. Here's 78.6. If you look at when this big Fed-induced rally started, see if you measure from here, we're exactly at 50%. So we have a lot of Fibonacci support right there. We have the hops and close support right there. We have the DeMark buy signal right there. Remember, we might have gone through the stop, but it doesn't count if we gap up. We've dropped right down to the 200 a day moving average. So we have support from a lot of things. And when you go to support in a straight line, you either gap under it and plummet, or you reverse sharply. So the prediction for Monday is we should have an opening price which will determine the day's trade. The obvious call is that if we gap down, we're almost in a crash scenario, even though crashes rarely happen. If all the support at this low can't hold, it could be major league trouble. But there's also a case to be made for a huge gap up at the open and a strong rally. It's going to be interesting to see what happens Monday, and I'm not going to try to make a prediction which of those two possible scenarios takes place. It should not make any difference anyway, because by the time anyone can act on it, it's probably going to be obvious. And that's today's call.